Here, joining us now is Morgan Stanley Chief Global Economist Seth Carpenter. Do you expect anything to move the markets from Powell today, Seth?
Well, it's hard to say for sure. Our baseline view is that the first rate cut comes in June. We heard communications earlier in the week. The market reacted to some of what Governor Waller said, and I don't think it was the reaction that they were looking for. I think he was trying to talk sort of generally about what's going on, and that's always the risk when Fed officials speak, particularly when it's Chair Powell. So I think he's going to try to say they're committed to 2%. They're going to sort of assess the data as it comes in. There's always the chance that it gets a little bit flubbed. I think he's going to try not to sound, however, overly dovish.
It's hard for him to even sound hawkish, though, at this point, because the data is pointing him in a dovish direction. And that's really the challenge, isn't it?
I think that's exactly right. And so they have very clearly come off of that sort of bias towards more and more hikes. That's been our call for a while. The market's priced that in now. And so I think it's going to be hard to lean too much. On the other hand, the point they've tried to make for a long time is that it's going to be a long road to get all the way back to 2% inflation. We're not there yet, although things are clearly moving in the right direction. And so, they tend to be very inertial. They tend to want to see the data come in before they commit themselves to anything. And we have to remember that this hiking cycle, there have been a couple times where they have first said transitory for inflation, second said that 175 basis point hike would be unusual, and they did a whole string of them. So I think he wants to be super cautious now before committing to anything that they know for sure where they're going.
Do you worry about these little flares of inflation that we get in the data? Even in softer data like ISM today, prices paid was a little bit firmer. I think Rick said that it was the highest since April, though still below 50. The expectations and some of the consumer sentiment data on inflation have been a little more elevated than comfortable. Should the market get a little more concerned about that or no?
I mean, I think we're in a very unusual time, right? This cycle is very different from other cycles. And so you have to take in all of the data to try to parse the signal. Nothing so far has really moved me from our fundamental view, though. If you think about the three biggest parts of inflation for the U.S., you have consumer goods, and those prices are still elevated in levels terms. We've seen those actually having negative change on net over the past few months. I see that continuing. Similarly, for housing, we know that spot rents have stopped going up as quickly as they were, and in many cities have started to come down. So again, the low frequency underlying trend there does seem to still be going in the right direction, but you kind of have to take all the different signals, paw your way through the details of the data to see if there's anything there. For now, though, I feel really good about our forecast that inflation is going to keep coming down.
And really quickly, we're going to get a jobs report and another CPI report before the December 13th meeting, right? And they'll be in quiet period. You expect either to move the needle?
I don't. It's going to be tricky, and obviously when the data fall into the time where they're not able to talk about it as clearly or publicly, it makes the messaging hard. Look, the non-farm payrolls report a week from today is going to be a little tricky because you're going to have to separate out how much of the rebound is coming from the end of the strikes that we saw. And that's going to make the headline number look a little bit stronger. You dig into the details, we think it's a modest further deceleration. And then for CPI, again, I mean, I think the major trends in the data really do point to continued falls in inflation. We think that's what happens for CPI this month, but there's always the chance that there's a little bit of a curveball. The Fed, I think, would be ill-advised to react to just one data point. They'd have to see it as a trend, and it would be hard to see what would happen for these two data points to really move the needle enough to change their mind about the December meeting.